I lived in Northville, Michigan my whole life. Hot. Cool, 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 cool. Guys, so welcome. Pleased that you guys have all come in here. I want to take some time today, a couple trading strategies that I use that I think are going to be really, really helpful for in terms of trading. So a lot of you guys probably don't know what like an ETF, right? So an ETF is something that just mimics an index, okay? It's something that mimics an index. So you have why. That's an index, that's an ETF that mimics the general market. And you have indexes for gold, silver, oil, whatever it is that you may actually want to trade. It's pretty cool. And so what I do a lot of times when I just don't feel like sifting through 1,000 stocks, especially for my longer term accounts, I take a series of ETFs and I can build a position and start making money from it. Or if the market gets wild, I actually use ETFs to day trade so that I don't have to sift through a bunch of random stocks. I can actually just trade what I'm seeing in the market. Today, I'm going to show you a few different setups or patterns that we can use to time ETF trades when the market has volatility. And today's actually a really, really good day to do it because today the market had a big flush. If you guys were paying attention to the market had a huge dump in the middle of the day, and we and ETFs to really capture and profit from that. I had a pretty good day. Actually, at one point, was up about $7,000. I gave some of it back, but we'll go in a second. And then we're going to talk about how to capitalize from leveraged ETFs. So they're index, but they have leverage. And then we're going to talk a little, really my go-to pairings for this type of stuff. So like I told you, they have ETFs for biotechs and oil and anything you really think of. And then we'll get this thing. A lot of you guys that don't know who I am, that handsome gentleman over there, that's me. I'm Kano. I've been trading my whole adult life. I started for numerous years. I started this company and I started building the website in 2008. We launched in 2009. So holy crap, it's been almost a decade. When I started this business, I was a wild man. I was a great trader, but I was a wild man. Time really flies. 1,000 I've done. I've taught students literally all over the world, anywhere you can think of. It's been pretty cool. And I've literally met and housed hundreds of them in my own home. I'm a really good site in the house because I've taught thousands of them, and I've actually seen and met thousands of them, over the years. And I think that's really important because, even this summer, we had, I live on the beach in Destin in a townhouse, and I rented out the whole row of townhouses here. And I had 20 of my students come in for almost 10 days, and we had like a summer boot camp. And, so I got to spend so much time with people in terms of really where they're at, how people learn, what they're trying to do, what their goals are, but most importantly, like what are the different ways that people take in knowledge to learn this thing, right? Because it's tough. Trading, guys, is single-handedly, I can say, the toughest thing that I've ever had to learn. The actual strategy of it, not tough. But the actual execution of it has been my life's battle. Because with yourself. When you're in the working world, I worked in a corporate job for a handful of years when I was out of college. When you're in the working world, there's always somebody to blame, right? My boss didn't give me my promotion. My cubicle neighbor Susie's a huge bitch, right? And it's like always, this guy screwed up the project. Oh, well, I'm just part of the group, right? It's not on me. And in trading, your wins are really about you. When you make mistakes, it's almost always a mental error. It's very rarely because you don't know what to do. Almost always, and even when I'm working with my own students, and I have like a mentorship group that I work with, and so I'm chatting with them and talking with them every day. It's never, I didn't know what to do. It's, fuck, I knew I shouldn't have done it, and I did it anyways. It's really interesting, right? But why is that, right? Well, so I have a really unique insight into why people do this stuff and how to stop doing it. But trading is the toughest thing I've ever done because it's a battle with you every day. Once you have an understanding of what you're trying to do and where you're trying to go, then it's a matter of fingers. You got 2 fingers, right? And all day you're just double clicking that mouse. And can you get what's here to here? And it seems so simple, right? It's just whoop, and you're here. And somehow that doesn't always happen. Why is that? Well, think about this, right? We know we're not supposed to eat pizza, but we all love pizza, right? You're not supposed to smoke them cowboy killers, but sometimes we smoke some cowboy killers, right? Who doesn't like a little Marlboro Red once in a while? We know we're not supposed to booze till we fall down, but every blue moon, not always, but every blue moon, we overserve ourselves, right? We partake in libations that we know will slow us down. Throughout our lives, we're always doing stuff we know we're not supposed to do, but sometimes we just do it. Why? Because we think it feels good and it doesn't feel good. And trading is kind of the same way. A lot of times you know what you're supposed to do, but you still can't. Throughout the years, just learning this about people and understand that, so much of what we do personally kind of affects our trading, has really geared how I teach people and how I build our courses. I spend as much time learning about how to teach people and how they work, just as much as I do about studying about the stock market. So it's pretty cool. But enough about myself. As you guys will probably figure out by the end of this thing, I'm kind of cool. Just kidding. But my mom does say that I am the smartest person in the world. But I got a really, really good program for you guys. So let's skip through all this junk. This is my marketing guy, Eric, kind of puts this up to make myself look cool, like, hey, look at me on stage. But we already know that stuff is already. So let's talk about this. What the heck is an ETF? And then I'm going to start getting into this. Okay? So an ETF is an exchange-traded fund. Exchange-traded fund. Why people use them is that they actually trade like stocks. So for those of you guys, right, that are into technical analysis, right, that's the understanding of looking at charts. Well, when you at stocks, so this is Boeing, right? So this is Boeing Airlines, and you can see, so this is their chart for Boeing Airlines. And this is Shop and so on and so forth. There's all these stocks, right? You have Apple. Those are individual stocks. What an ETF is it mimics an actual index, okay? And so, if you wanted, say, biotech stocks, there's a lot of good biotech around right now. One of the ones that we were trading was recently like this VRTX, right? So you have VRTX, or you have, yesterday I traded this IRBT, you have Excel, you have different stocks that are individual companies, right? These are individual companies in the sector. Now, when you have a job, so I learned this kind of strategy when I first started working from my mentor, Paul Singh, not the one from Wisconsin, but the one from Minnesota. And Paul, when he was teaching me, he was a lawyer. He was a big-time lawyer. And so we always traded ETFs while we were working because in an individual stock, what happens? You have news coming out, things happening. There's all this stuff, right? But sometimes when you're just grinding it out, and you got kids and diapers thrown at you, and your wife's telling you to do the dishes or whatever it is that you may be doing, you may not have the time to necessarily just dig right into the individual company. But you want to participate in momentum in a particular area, whether tech, bios, anything, right? Solar, wind, whatever it is that you want to participate in. Sometimes you don't want to dig through all the individual companies, but each single one has an ETF that represents the actual index, right? So for tech or whatever. And so when I was working, this became huge for a very, very specific reason that, well, I was working and I don't have time to sift through all this stuff, but I still want to make trades and I still want to get gains. And then the other thing that really happened, so over the last so many years, is a lot of these ETFs, they started adding leverage. They started adding leverage to them. And so trading the ETF for biotech, what you would start to do is they would have a 3x ETF for biotech. So when biotech moves 1%, the 3x ETF moves 3%. So now that ETF moves at the same velocity as what an individual stock would do. So I have a handful of ETFs, and we're going to go into kind of how to use these things that I use all the time, right? So LABU and LABD. So LABU is a 3x ETF for biotech. So when you're thinking about, like when you want to go and look at biotechs, you can look at LABU. And then what happens is, if you think biotechs are going to go, you can just literally make a trade in LABU. And the beauty of it is that, just with anything, you can go long and short on these bad boys. But even better, with ETFs now, like I do a lot of trading in my retirement accounts. Swing trades, longer term trades. And so, if I'm looking for like a multi-day hold, if I want LABU, I can buy LABU. But if I think that it's going to go down, every single one of these ETFs has an opposite. Go long biotechs, you can buy LABU. But if you wanted to short this bad boy, like bet on it to go down, LABU has an inverse to it. So when LABU goes up, this one goes down. And when LABU goes down, this one goes up. So you can see like this one was up 7% today, and right, LABU was down 7% today. Pretty cool. And notice the range on this. So a regular index never moves 7% in one day, ever. Right? That's a big move. Right? That's a year's move for some stocks. But because you have 3x ETFs, you can capture the leverage in the particular index. And so oftentimes they can even better momentum than going after an individual stock. Now, biotechs is a special case. They always move really well. There are some indexes that don't move that much at all, right? And so, playing the individual being better. So we have LABU and LABD. Now we have TQQ, which is something I actually trade almost every single day of recent, and then SQQ. So this is the leverage ETF for the Nasdaq. So if one of the things you guys have probably noticed, if you're looking at the Nasdaq, so this is the general Nasdaq market. The Nasdaq, guys, represents what? Does anybody know? The actual tech market. It represents the tech market. Good. And so when the tech market this year has been just flying, so this is 2017. So you can see this thing is at 120. Now it's at 145, right? So that's your tech market. And if you really think about it, Apple, so what makes up tech? Apple, Google, Facebook, NVIDIA, Amazon, Twitter, all of these things, right? And so, that ends up being a huge thing. So hold on one second. I got to send one of my students this invite. Boom, 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 boom. Hold on one second. You're trying to get in. So if you want to trade the Nasdaq, but with a little bit of leverage, what we call a little bit of juice, you're just day trading the actual Nasdaq index, it's not going to move that well. So like this is your intraday chart, right? So like on a daily basis, how much is this thing really going to move? So it goes from 144 to 175, and that's like on a huge trend. That's not really that impressive, right? I mean, for most of us that are retail traders, we can't live off some 75 cents, right? We need the juice. We need the juice. And so that becomes really, really important. So rather than the QQQQs, right, we can go in with the TQQQ and see this. While the QQQs moved up cents, TQQ moved up $2 and some change, right? And so you have that 3x movement, and it still mimics the actual Nasdaq, okay? Now, if you were thinking that the Nasdaq was going to go down, TQQ has an opposite to it, which is SQQ. And you can see this thing's just been getting shredded to the downside. Why? Because the Nasdaq is going up, okay? And so you can come in and play the SQQ if you think that is going to go down, okay? So they have inverses to, which is always cool. And so I use a lot of this in my swing trade accounts for like those kind of 3 to 5 day kind of quick bursts, because you know you can go both ways on these bad boys. Now, on the other side of things, you have TNA TZA. So TNA TZA is the ETFs for the actual small cap index. So if you look at the small cap market, if any of you guys trade small caps, you use IWM. That's the regular index that represents the small cap market. And you can see this year this thing's done shit, right? It hasn't done anything. But if you wanted to go and get 3x leverage on it, right, you can go with TNA. Now, this one we don't trade this year. Does anybody know why? We don't trade this. It doesn't move. As traders, we have an imperative to be with the trends, to be where the momentum is. We're only as good as the momentum we trade. So the small cap market doesn't move, we leave it alone. This year, small caps, they haven't done really nothing. So we don't even bother trading. There's going to be other years where you have really tremendous runs in small caps. And so that may be something that we want to look at when the actual small cap market is heating up. That's not the case right now, but there have been periods of time where they've epic runs, right? In the market, no index is really ever hot multiple years in a row. Sometimes they are, like tech, but a good majority of time, they rotate. 1 year, biotech is hot. The year before, it was awful, like, right? So like this Labu has been really, pumping right now recently, but last year didn't do shit. See that? You know, just recently started to move. Some years oil is super hot, and there's ETFs for oil also. And the last so many years, it hasn't done anything. So this is oil. This is not tradable, right? In absence of trend, guys, you have no edge. Remember that as retail traders, as long as you have less than a handful of $1 million, in absence of trend, there is no edge. So if you're sitting there trying to trade something that just has been sitting flatline for a long period of time, sometimes you may win, sometimes you may lose. Okay? No edge. No matter how good of a trader you are, you don't actually have the wind at your back. Okay? But when you're playing the trend, whether it's up or down, well, now it starts to work in your favor. So like whether the trend is down or up doesn't matter to us. Remember that for ETFs, upside and in, whether it goes up or down doesn't matter. So like the ETFs for oil, right? There's this SCO. So this SCO shorts oil. So like if you're thinking oil is going to tank like it has been the last, you can play this SCO and vice versa. And then an SCO, so they had those. But the oil market's been dead, and it may be really a permanent thing. You know, if you really think about oil, it really hasn't done anything for a long time. You know, maybe dead for a long time, right? No, oil's not cool anymore, right? It's not cool anymore. Now everybody wants to get a Tesla, right? So oil's not that hot anymore. But they have ETFs for all this stuff, but there's always a rotation into them. Same thing. So another one that I use quite often is Nugget and Dust. So this year I've barely used Nugget and Dust more than a handful of times. But the year before, when gold was hot, I used Nugget and Dust all the time. So, you know, you could see like you would have all sorts of movement last year, but you did not have that type of movement anymore this year. So like last year in 2016, this is a double-edged sword. I have my biggest gain ever and my biggest loss ever in this damn Nugget for transparency purposes. But you can see this thing started at about 4, and it went up to about 140, 142. So that's long gold miners, right? So like if you like people that mine gold, you know, so it was really, really hot in 2016. And then it came crashing back down, but there was still movement, both up and down. And as long as there's movement, whether it's up or down, we have an edge. Okay? We can ride trends both to the upside and the long side, because the opposite of Nugget is Dust. So once a trend starts going down, right, we can short Nugget or we can long Dust, which is an inverse ETF to that gold. And then you can see this year, it's been dead. There's really no action here, no rhyme or reason, right? It's a no buenos. That's Spanish for no good. ERX, ERY. So these are leveraged ETFs for energy. So you can see like energy's just been in the huge shitter forever. So there's not really anything going on in them. They've just been kind of grinding themselves down. It's not really tradable on it to the downside. And for a long time, energy used to, you know, go up, but you can see, so this is the short, right? So you can bet on it to go up, and you can bet on it to go down, okay? So now let's talk about this on the other side of things. Hold on here. So you got banks, right? Banks are also a little bit boring, but sometimes they move. So you have FAS and FAZ. So, you know, this year banks have been trending. So this is a 3X ETF to long banks. Goldman Sachs, Bank of America, Citigroup, JP Morgan, right? So if you think banks are playing these to the upside, I'm going to show you the patterns to get into these bad boys. I know I'm just kind of throwing a hard at you right now, but we're going to dig back into how you would actually play these. But in the moment, let me just discuss what they are first. Now, on the other side of things, FAZ shorts banks, right? So you have both kind of, you have both different ways to get into these bad boys. So one's long, one is short. So now let's think about this on another way, okay? Then you have volatility. So when the market gets wild, you can use UVXY and SVXY. Now these things inherently just decay. Because the market's been in a bull market for so long, there's just a huge decay in these. This is measures volatility in the market. We've been in the bull market for 10 years. So this thing kind of just trends down unless you get periods of uncertainty in the market. And then this is SVXY. Essentially, right, you're betting against volatility. So you can see the huge trend on this thing. Okay? And it's been nice, right? This thing was 20 bucks just a little bit of time ago. So you got some just pretty hot action there. So now let's get into this, right? So what the heck do we do with all this stuff? What the heck that we would do with all this stuff. Okay? We have two different aspects of trading, guys. Okay? We have two different aspects. Capitalize, right? So, first of all, you have to identify what type of trader you are, right? You have day traders, and then you have swing traders. Give me a heads up for who's a swing trader out of this group over here. Let me see who's a swing trader. So swing trader is somebody that's going to hold stock for 2 to 14 days. Okay, hey Josh. Okay, Mr. Masterman, swing. Bruno, you guys are swingers, you dirty dogs. And we got some day traders too. Mr. Classy, doing both. Okay. Miss Molly, how you doing? Mr. Barber, Ken Barber from Philly, where you been? I haven't heard from you for a while, sir. I know, Philly is basically Jersey. Come on. Good. So we got swing traders and day traders. So there's a couple different. A long time no see. Holy crap. So how do we capitalize on these? Well, if you're day trading, right, we're going to use these in certain situations using intraday charts to capitalize. But first of all, let's talk about just some swings first, okay? So hypothetically, right, so like I'll give you an idea. So like IBB is the actual ETF that represents the biotech. And this thing's $300. Like, who the fuck wants to buy that? No offense, right? But this is the ETF for biotech. So what you can see here is this thing hasn't done shit forever. It actually was on this most epic uptrend forever. You know, oh my God. We're trending 2014, 2015. Life was good. I mean, every day we'd wake up and it'd be like, what are we going to trade? Yeah, bios are probably, like I have my business partner, Saeed. He's like my angel that sits on my shoulder. He's one of the best traders I've ever met. And, you know, we G-chat all day and we share ideas. And we've been together now for 10 years. Not dating, but, you know, as trading partners. Not that there's anything wrong with that. But, you know, in 2014, 2015, we'd wake up, it'd be like a G-chat. I mean, he lives in Queens, and he'd say, we'd be like, dude, what's hot today? He's like, probably biotechs, right? And that was hot for a couple years. And then you could see in end of 2015, 2016, they just came crashing down, okay? So now what you've had since 2016 is this big, it's not moving at all, right? So you haven't been moving at all in the biotech market. So this is like your chart for the biotech. Mr. Long Dong Fong, how you doing? Right? So you see how you're just kind of sitting here in this range for like a long time. For about 2 years, I've just been watching this thing, right? I've been watching this thing. And you can FaceTime me when you're done if you're Maxwell. I'll be around. But only FaceTime. I don't do phone calls. So you can see for 2 years, test, but it hasn't done anything, right? And so, you know, I sat there and I just set an alert, right? Like, hey, if this thing ever gets, and I check it once a week or so, it's getting close, but hey, if this thing ever breaks above here, and so I always set these alerts, and then what I do is I text it to myself, I email it to myself, and then I email it to my business partner, Mary Beth, and I also set a little alarm for myself, just in case. You know, so I never forget, right? And they have other, you know, sometimes I use a gong, but it's kind of cool. That was for Maxwell. He's into gongs. So you're just stuck here. If you get over this 300 level, guess what? It's you may get a new trend that starts, right? That's really, really important. So when stocks are consolidating for a long period of time where they just haven't moved, guess what you can do, right? It's not going to really it's going to really do nothing. But what happens is when that consolidation breaks, potential new run. It could start a potential trend, a new bull market in that particular sector. So as I'm watching this IBB, you know, as this thing comes about, right, I know that the 3X ETF for IBB is, what is it, guys? Come on, who's got the right answer? Dun, 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 dun. It's Labu. Duh. Good. So, and guys, there's a website called, you know, when you're like digging for information, you know, I use this ET, and I have them all memorized at this point, but they have ETFs for everything: bonds, communications, materials, small cap. I mean, they have ETFs for everything. The main thing to understand is that there's more ETFs than there's probably stocks. People have made ETFs for all sorts of stuff. It's just like a big money grab for some of these people. But they have ETFs for all this stuff. So, you know, if you're looking for, you know, get on the Google, and they have a few of them so that you can use here. You can see, so like these are kind of ones that you can put on your list. And they have an ETF for everything. So I just go on this site and, you know, if I was like, oh, I wonder what the ETF for China is, right? Or for Brazil. And now I know all these, like I know EWZ is Brazil and FXY is China and so on and so forth. But at some point you got to do some actual research. So you can use this website, and that will really help you kind of when you're trying to figure out what you want to trade. So Labu is the 3X ETF for IBB. And so I have the alert set, and then so when this thing is ready to go, as a swing trader, right? So you know you're somebody that's holding for multi days. This type of breakout is very, very important. So does everybody know what a breakout is? So a breakout is essentially when you have range on a stock, right? And it's been held down with a lid on its head, and it just can't get over it, okay? And so you've just been stuck under that lid for a very, very long time. And so what happens is after you test the level so many times, when you finally break over it, you can get really, really explosive movement, okay? The key to any breakout, of course, is you've got to test the level at least 3 times. And then what I like to use, and you 9 EMA on charts, guys, even your daily charts, when you have the really riding up right up under the breakout, right, that tells you that it's too extended to actually break out. You can see like the areas when you test these, some of these other times, they're not very clean. They're almost a little bit too extended going into it. You can always tell, right, is if you have a base, a little bit of consolidation right before the breakout, and then you thrust through. If you're 9 EMA, 3 times or more red, when you can finally break through, and if you got that 9 EMA just cupping the balls right there, right up under it, now, guess what? You have something that's powerful, but you have support coming up under, right? You have this level of demand that comes up, but then you have an easy way to set your stop loss. When you are trading, guys, the most important is not where you enter a stock, but how you manage your risk. Like when we're teaching our boot camp classes, everything we do is around managing risk, right? You know, our boot camp classes are 4 days a week, and it's risk, entries, looking for the line in the sand, but it is the key to everything, right? So when you have that 9 EMA coming up under it, now you're good to go, right? So now as this thing is breaking, you can take this trade. So as a swing trader, for those of you guys that are swing traders, I'll usually take the position at the end of the day. Once it breaks, I'll take it at the end of the day so that I don't have to worry about like buying in the morning and then sitting there staring at it all day. I'll take it at the end of the day. I'll put my stop loss under the 9 EMA. And now I have myself in a potential swing trade. Now, for those of you guys that are swingers, alternative lifestyle motherfuckers. But for those of you guys, let me tell you, don't be scared by the price of a stock, okay? As swing traders, like when I was a new swing trader, guys, I was in my, and I was doing swing trading. I buy the $2 stock because I could get a lot of shares. Oh, well, I used to do it all the time. So my mentor Paul, he'd be like, I'd be setting my trades. He's like, what is this garbage? And I'm like, he's like, why'd you buy this? I'm like, well, why didn't you buy this one? Because I would have 2 stocks on my watch list. And Paul would be like, why'd you buy this one? I said, well, this one was cheaper. And he said, what? If you go to the mall, I mean, and you're looking at 2 pairs of pants, do you just buy the one that's cheaper or do you buy the one that fits you? I'm like, buy the one that's cheaper. I am Indian. Yeah. All right, but you got to go with the right one. So people always think like, well, if it's $2, I can have thousands of shares. The problem is a lot of times $2 stocks without a PR release or earnings report, they don't really move. They don't do anything, right? Sometimes getting 100 shares of even a $55 stock that would cost $5,500, that can give explosive gain than some $2 nugget because you just buy it because it's cheap, right? Because you buy it because it's cheap. So typically when I get into something like this, right, I'll buy at the end of the day the 9 EMA, and I'll ride this thing. And I'll sell half my position when it gets completely outside the upper Bollinger Band and it gets overbought. So I would need 4 or 5 days of thrust essentially to get that. Once it gets that overbought, I like to sell some. And look, you're never going to sell perfectly. Like in this one, I sold like 65. I was $10 early on my half sell, but that's why you have the other half position, for the bigger home run. So, that becomes very, very important. Now, this is the thing. Once a stock breaks a big, big range, say you're a swing trader. As a swing trader, guys, you will get numerous opportunities in a stock once it has actually broken out. Numerous opportunities over the next month. So don't worry about I sold all mine, it's going to run forever. You're always going to have more opportunities. So like this Labu ends up being a very, very good swing trader because you this. And then what happens is, I love trading flag patterns. So if I'm missing initial thrust, I always wait for the flag. And so, as this thing starts to base out, what are you going to do? Right, as this thing starts to base out, you start to develop some support, right? When a stock goes up 30, 40%, the natural thing is for it to rest. Nothing goes up forever, and you don't want it to, because if it does, it's going to crash. It's not sustainable. If you want a sustainable run, you need stair-stepping action, meaning you pop, you go sideways, you pop, and then you go. Lou, you better stay in my house. I will be there in November. So as this thing comes back down and you start to build some support, right, you can start to take a position once you get a line in the sand, right? When you start getting some supports build, you can take a position as this thing flags out. And look, it's in swing trade, in day trading, everything has to be picture perfect. You got to get it the second it breaks its flank, put your stop there. In swing trade, stuff matters because it's more about where you manage your risk and what the potential reward is, right? Gain, if it goes, and then how much are you going to risk, right? So like your flag breaks are never going to be picture perfect, and they don't have to be. So now as this thing is starting to come in, right, you want to take a position in here and put a stop right under and limit your risk. And now your next target is back up to this old high. So you're going to reload some, and it might be only 50 shares or 100 shares. And then you're going to be selling some back over here, as that's your old resistance, and then you still have half of your position. So like I'm still in a swing trade of the half a position, even though I've been holding this thing from here. And as this thing rounds about and sets up again, I will keep hammering this thing because I believe that this thing is starting a new trend. Pretty cool. And on the other side of things, you can day trade these things till all ends. So like if you're a day trader, right? If you're a day trader and you think this Labu is about to break out, right? You can take day trades in this using the same type of patterns as it starts to break. Now, I found that day trading this Labu, since it started to break, it's been really tricky. You know, you've had to be really spot on to hit these things. Like the day it started to break, you know, really get juiced up. You know, like it gapped up and then it just came down and it popped up and it didn't really give you anything. You know, so like you would have been kind of stuck on it. But the next day, like it gapped up and you had like this really, really nice flat top breakout and it ran into the close. And once it starts to break, you can start day trading it really every single day. And the next day you got a hot one, right? So like when you have a stock that goes on a big run, the next day if it opens up weak, you can take it on a red to green and then really, really take a push. So you can day trade them too, Molly. You just got to be good at day trading, right? You just got to be good at day trading. So yeah, you can, you know, short these and do all the fun stuff that you want to do. Now, on the other side of things, guys, you know, say like tech, right? So like tech has been on this huge tear this year, okay? This huge tear this year, right? So you get this big, big trend. So when you're doing tech, like I haven't been in a tech swing trade since this area here. I know Paul got in over here and he just killed this thing. But, you know, even something like this, when you have like a big range like this, so like this is an IRA type of trade. So you can see like this 133 is like a big lid on this, right? So when it finally breaks over, you can actually take a trade in the Q, that's your tech index. But what I'll do is use TQQ, right, to get that extra leverage. And then play, right, the move to the upside. So that becomes very, very important, guys. You can do swing trades in any of these indexes. Look, this is China. FXI is an ETF for China. Have it's actually, I don't know, it's Ying. They have like yin. So like yin, I don't know why they call them yin yang, the actual ETF pairing. It's funny, right? But like say you wanted to long China and you're like, wow, look at this consolidation, right? And you wanted to play this, you can go with YNNN, and then you know you can play this to the upside, and then yang, one that shorts it. Like if China started to crash, you could long yang. And then that would be the opposite of yin. On the other side of things, you know, when you're day trading, you can really cook. So like we day trade this TQQ quite a bit when the market gets a little bit randy. You can day trade this QQQ in all sorts of ways. A TQQ in all. So like TQQ is the 3x ETF for the Nasdaq. So when you're taking this, like say you see the Nasdaq running one day, right, and you're day trading this bad boy, you can take and play the individual patterns in this, like this one of the days we had like a big run in this thing, you can see like you'll get some really nice trenders in this. There's some good volatility in this. And then you can also short them, right? So like today, the Nasdaq rolled over, right? So today the Nasdaq rolled over. So, you know, when the Nasdaq's rolling over and say you wanted to short this thing, what you can do is you can actually just short TQQQ, which I find easier to do, or you can long SQQQ, which is the opposite, Justin, of the TQs. You know, so look at this bad boy. I mean, this is fetch. If that's not fetch, I don't know what fetch is. Right? So you can see when this thing starts to really move. I mean, that's $2-3 right there. Right? That's a nice move on that's a nice move on a stock. So you can go in both different ways on this and really nail them. You know, yesterday in the chat room, so in the Bulls on Wall Street chat room, you know, I'm on screen share in front of these guys, and we have a chat room here full of some amazing goofballs here that, you know, we chit-chat all day, and we're day trading and all that fun stuff. But yesterday you had the FOMC. So does anybody know what the FOMC is? So that's the Federal Reserve. So Janet Yellen, she's this older lady. She looked like her grandma, basically. She's coming in and saying, like, hey, you know, we're not going to really raise interest rates or whatever. She just gives a speech. And I don't know what the heck's in these speeches. But what they usually do is they make gold move. Now, gold sucks to trade the last year. Remember I told you, right? This whole year, Nugget hasn't done shit. Right? It hasn't done anything. He's just sitting around. But on an individual basis for day trades, guess what happens? So in our bootcamp classes, you know, we have 3 different sets of days, 3 different times of day. So in bootcamp class, one of the things that we're always focusing on is, number 1, the open. Right? The open is where opening range setup. So that's your first hour of the day. Your middle of the day is like your consolidation phase in the day. That phase of the day requires its own different type of setups. For those of you guys that have been trading for a while, remember that if you're trying to a trade in the middle of the day, but it's an opening range, it won't work. Like a lot of times when you do flag patterns, but you do them in the middle of the day, they die. Why is that? Flag patterns, short flag patterns aren't meant for the, they're only meant for the open, right? So you have the open, you have the middle of the day, and then you have your end of day. So the patterns you do at the end of the day, it's called a day-long consolidation play. Day-long consolidation play. So when Grandma Yellen is talking, this is just a day trade, right? When Grandma Yellen's talking, right, you start to see Nugget start peaking up. This is your 3X ETF for gold, right? So this thing really starts to pick it up, right? And so I missed this because I don't have an entry there. See, an entry is all about what? How can I get in where I can manage my risk? Like, if I bought it here, but I couldn't manage my risk, even if it goes up, it's not a good trade. It's awful, right? What I need to do is get in where my risk is low. Because this is the thing. I'm Indian. I don't want to risk much, right? I want as low as risk as possible, right? We're cheap. So I got to wait. Sometimes even when you buy a stock higher than where you originally saw it, you could actually get it where its risk is lower. So you wait. This thing comes up. Now it starts sideways, okay? Now, when I trade an intraday flag pattern, I need to see the same type of parameters as I would in a longer-term day trade. So remember what we said with IBB. What do you got to see before you know it's ready to break out? What do you got to see? 9 EMA coming up. You got to see that 9 EMA pushing up. When you get into a flag pattern and your 9 EMAs too far, that pattern is loosey-goosey, right? The further you are from your 9 EMA, the more chop there's actually going to be in the stock. And so it's not going to be tight. And if it ain't tight, it ain't right. And if it does, it's heartburn because it's going to go back and forth. But if you can get a pattern, a breakout, the 9 EMA here, you don't have any room to go. So guess what happens? When you finally break when you break resistance, right? Test. You got your 9 EMA coming up. What's your risk on that? 10 cents. So when I bought this thing, and I sold a little too early, I ripped 1,000 shares of this on the break, stop under the 9 EMA. I got 20 cents risk max, but it's really just 10. You get 1,000 shares of this. This is 5-minute candles. Boom, right? Within 10 minutes, you're up $1. That's pretty cool. That's what day trading is all about. How can we make the most amount of money in the shortest amount of time, right? That's the whole ballgame. But the key is to wait for the patterns and then always make sure that your EMAs are cruising up under it. It's going to help you a lot because it's going to lock in that risk and give you the explosion you need to make a run. Boom, 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 boom. Da, 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 da. Now, on the other side of things, okay, what we can do is at times you may get big falls in a particular index. So you can see like this, like has this big fall, right? And like even this, like see like how it cruised up from 50 to 90 and then it had this big dip down, right? And then it cruised back up to 100. Look at the range on this thing, right? And then it cruised all the way back to 70. So this particular index, JDST, which follows gold, is just moving around just wild, right? And what ends up happening with this thing is thing has like just this epic fall on over the course of like numerous days, right? So over the course of numerous days, so this would have been, geez, 515, right? So you can see like when this thing was 100, this thing, when it started to fall down to 70, I was trying to long this thing, right? I'm trying to long this thing for a potential bounce. And so this becomes a great day trading instrument when you trade these ETFs because if you look at what the average gold stock moves, like AUI, right? It barely moves at all. What's another good gold stock? NIM. Some days it moves, some days it doesn't, but you can see most days it kind of moves like 30, 40 cents. Untradeable, right? But so say you're looking at this and say, man, I want to shred some gold because I believe that it's coming back down to some support, right? So this thing was come crashing down. So when I saw this thing, when I had this thing on my watch list, I said, wow, like gold has really just tanked, right? It's really tanked. And this is an intraday chart. When gold finally, when JDST finally it gapped down another $5, I said, wow, like this thing is ready to bounce, right? Because based on the daily chart, I'm thinking, okay, this is ready to bounce. Guys, all our ideas come from daily charts. Our ideas come from daily charts. Remember that. If you don't have a pattern or a thesis behind your trade of what should happen, you can't take the trade. If you just intraday trade, never gonna work. Only when you have a thesis of what should happen on a bigger term time frame can you start the intraday. So I have JDST on my watch list because I think it's gonna bounce on May 15th, right? Because it's pulled back from 100 to a few days. And I'm like, fuck, this thing's gotta bounce, right? So this thing gaps down. When you think something bounce or fade, and you get a gap, that's your sign. Guys, that is your sign. When you have something that you think is extended and you're looking to day trade it and it gaps, that's your sign of the reversal. A good majority of the time. Best trades I've ever had are in exhaustion gaps, where you look at something and go, holy crap, this thing is really extended to the downside or upside. And then it gaps again and gets even stretched farther. Stocks, rubber bands, the further you stretch them, the harder they snap back. So when you get this gap down, that's an exhaustion gap. So as soon as that happens, I'm already looking to long. I believe on the daily picture, we have a potential long. So this thing gaps down, and you start to build this opening range, right? So when you build the opening range and you take it out, you can long this thing, right? And you're going to put your stop right under your near support. So when I'm day trading, if the stock breaks, I can use the VWAP there, volume weighted average price, a very, very important indicator for those of you guys that are not using it. Probably my favorite thing that I use. Now, once this thing starts to pop, so I'm in at, say, 71, right? Once this thing starts to pop, always sell half. In day trading, we're going to stick and move along the way. So as day traders, we scale in and out all day. You buy, sell some, and then when you get another setup, you buy it again, right? And then when you get another setup, you've got to buy it again. Yes, Mike, you know what? I'll do a little VWAP in a hot second. Good call. So buy, and then you're just waiting for your flag patterns, right? Buy again, and see, these are like $2, $3 spikes, right? Sell half, out again. Man, my drawing skills are awful, right? Buy, and then you always want to set your stop under the nearest base or your EMAs, and now you really start to get the explosion. So this is 73, right? So we're adding a 71, we're adding a 72, we're selling along the way, we're adding a 73, but now you're really getting juiced. You got 75.40, and then you get another flag. Guys, as these things are flagging, you can keep hitting them. Remember, we know on a bigger picture, this thing was at 100, got down to 70. It is reasonable to think, just via common sense, right, that this thing could bounce $10, $20 over the next couple days, right, and start to retrace. And so as we see the, we get excited, and then play the flags to the upside. Very, very simple patterns. The key is to wait for them, manage your risk, always to stop under the base, and now you're going to be good to go. So somebody just asked, like, what the heck is VWAP, right? So how do you use VWAP? VWAP is a really, really interesting thing. So VWAP represents volume-weighted average price, okay? So volume-weighted average price. So on your intraday charts, if you're using TC2000, you know, you just add in indicator, you put in VWAP, and you're good to go. Now, how I use VWAP, okay? How I use VWAP is it's almost like a moving average. But even more important than just a plain old moving average, it's a line in the sand of a stock. See, when you say volume-weighted average price, what that means in layman's terms, let's just talk about layman's terms. What that means is it's the average price of all the buyers and sellers divided by the volume. So I just take it, how I look at it is it's just the average price of all the buyers and sellers. So you take the whole market as a whole of who's trading it, that VWAP price is their average price. So how does that on a psychological but also technical level matter? Well, if all the buyers and sellers have a certain price, right? When you finally, and you've been riding, you finally break under it during certain periods, it's a line in the sand between who's in control. So when a stock's price breaks under VWAP after it's been above, what that means is that all the aggregate of people are underwater under trade. right? So if people are trading the Nasdaq and right their VWAP's at 145.76, you finally break under it. What that means is that the average person is underwater on their trade in aggregate, right? Because we're talking buyers and sellers. And so that can start an area where some flushes may happen, right? Because now everybody's underwater, so you may get exaggerated selling. On the other side of things, where the VWAP comes in, the same type of deal is it can act as an area of support, resistance. So like it can act as an area. So when you're thinking about VWAP, actually this is a trade we took the other day. So like this is a stock Omer that started to run in the middle of, from the morning. So this is July 14th. So this stock goes in from 1970 to 2000 to 11. It starts going to 21. And then they work really, really well kind of middle in the day, early afternoon. That would have been Mohammed May 15th, 5-15. So when you start to pull back, and this works really well at lunch, when you pull back to the VWAP, that VWAP often will get defended and can be a very, very, very good bounce point for that stock. Okay, so it can be an area, come down to it, it can be a potential bounce point. So there's a couple ways to do it, right? What I do is as it's coming down, I'll wait for a candle to hold. I'll wait for a green candle to hold. So I know that that area is real. Like I just won't buy something when it comes into an area because you don't know what's going to hold, right? You let it come down, you get a green candle to hold, then your stop goes under, and now you can play this thing to the upside. Tesla does this really, really well with VWAP. We do a lot of VWAP trades in Tesla over the last, couple weeks. We've done quite a few where you come in and you'll get these like nice VWAP bounces. So you get like this big morning pop, and this happens a lot during lunch, right? So you say you're at 345, you come back down to VWAP, green candle to hold, so you can buy really anywhere in here, and then boom, stop goes under, and always give it about one candle's worth of room, and then you can trade this thing back to the upside. So Tesla actually interacts really, really well with this thing. The green candle to hold is kind of important because, sometimes they just don't stop. Like you can see this particular day, July 24th, big run, 330 to 342, and then it comes back down to the VWAP, but it doesn't hold, right? And so without the green candle to hold, you can't go. And so, like for me, this is what happened. Here, you got the green candle to hold. See that? But then you got stopped out. Sometimes that happens. But if you ever remounted the VWAP, meaning like, yeah, guess what? Sometimes in trading, you'll take this to get to the bigger trade, right? If you're going to get $3 or $4, you may have to risk 50 cents, and sometimes you get stopped out, and that'll happen. But if you remount it, that's confirmation that the area is real. That's confirmation that the area is real, and that becomes really, really important. So, you can use that. Sometimes you may get stopped out. Once it confirms, especially if it's during that lunchtime, it ends up working really, really, really well. And look, if the stock is just sitting around all day, not going to work, right? What you need is trenders. You need trenders to play the VWAP. Like you need a thrust, and then a pullback, and then a go, right? Thrust, pullback, then a go. Dun, 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 dun. Thrust, pull, and I'm telling you, I find that midday to afternoon is the best time to do them. You know, you can do them a little bit earlier if it's clean, but same type of deal. So you can see like this is HTZ, right? It's trending all morning. So runs to 1450, then goes to 15, and then see how it's pulling back to these EMAs, but it's too late in the day for those short-term ones to work. Once you're in the afternoon, you need that. You want to be a part of the lifestyle, guys. It's not just an indicator. It's a lifestyle. So once you get the green candle to hold, stop goes under. Mike, once I remount, I'm in. And then I'll just use that last, I'll use that last low. Once it remounts, I'm in. Because at that point, you just can't wait. Green, see how it doesn't test all the way, but as long as it's holding above, you're good. So if you need the, you can wait till it breaks over the EMAs, or you can anticipate. There's two types of trades, confirmation and anticipation. It's a personal preference. Anticipator will wait and just buy it as it's coming down with the hope that it holds, but they risk really little. A confirmator, so I don't know if that's a word, but a confirmator, he'll wait till either you get a couple green candles or breaks over an EMA and go. And that's the two different aspects of you can use to really get confirmation in your intraday trades. Like when you're doing quick day trades, you can use your EMAs as really a good confirmation. Like for example, like I took this trade today and in this AOI. So we had this AOI for this breakout here to 103. And see how it started to pull down? And like rather than just buying it at the 9 EMA, Mikey, right? I let it just figure out where it wanted to hold. And then once it held, and then it's basically above the 9, I took it, right? Because I didn't know if it was going to be here or here. I was thinking it was going to stop here because that's high, and then that's also your 20 EMA. But you don't necessarily know for sure. The thing moves so fast that even if you were trying to really just pick the spot, you never really get filled where you want. So once this thing came down and then boom, held the 9, I was back in this thing. Does that make sense, boys and girls? Sick. Guys, so fun times. Let's open this thing up to some questions, and we'll get this party going. Guys, the stuff that we do, we have our boot camp starting August 1st. You guys, so many of you guys are in our last boot camp or the ones before. All our students have lifetime access to boot camp. Some of these guys like Maxwell, they're really, really slow learners. And so they come into boot camp for a long time. They come in, I'm just kidding, Maxwell's my buddy. I FaceTimed him once while he was in school, and he was freaking out because all his classmates were around. So now I got to hassle him. He's like, dude, are you FaceTiming me while I'm at school? I'm like, yeah, of course. And he was freaking out. But I also cracked a slightly semi-racist kind of, like, we're all Asians. And so he was in the library. So I was cracking an Asian joke. He's like, dude, I live in San Francisco. You can't say it. I can say it. I'm Asian too. So 3-day boot camp, guys. 28 live classes via webinar just like this, right? We have class 4 days a week, and I'm on the tube. It's for dead beginners, okay? We start people off in the dead beginning in terms of foundation, right? So if you've never traded a stock in your life, you don't know what a chart is, how to set them up, how to get everything going so that even if, your grandma was coming into class, we're going to take it slow and build it up, okay? I'm on the tube for everything is recorded and archived for playback, okay? Everything is recorded and archived for playback. So we have this awesome bootcamp module page where all our our classes are. So not only do you have access, you know, the live classes, which you can retake as many times as you want, but you know, you can watch all the old boot camps too. Okay, so it's pretty cool. And then we have a good resource center with all the stuff you need here, your different videos. Everything is really easy to find. We have a private community where people can hang out and chit chat. We have a really, really good group of people. When boot camp is done, everybody has access when they're ready for it, access to our chat room so they can watch me trade. And I'm in there hanging it some days and screwing up the other days, but I'm trading in front of everybody, chatting out loud. You know, one of the things about trading is it's one thing to learn it in class. It's one thing to learn it in class, right? It's another thing. It's one thing to read a book, but that's static. Trading, everything is dynamic. It's moving around in real time. So to really, really learn, to connect your book knowledge to real life knowledge, you need to bridge that gap, right, of everything that's static to something that's live. So the best way to learn that is to watch me trade live, to go out and do what you're going to do someday. Okay? So very, very important. From there, we start market trading in front of you 3 days a week. We'll have a recap every single trade I today. You know, and I screwed up today big time. You know, so like today we had a market recap, and the market recap was about the trades I took. So you know, I trade futures, I trade stocks at you know, $100 in stocks, which is not very good, and then $1,400 in futures, so about 2,000 and some change. I was up quite a lot at one point though, but I made a couple mistakes and I gave back. You know, I was up about 2 G's on stocks, and I was up quite a bit on this also but I got shaken out by the market. But we talk about that. You know, we do a market recap and we talk about it. I said, guys, I'm a degenerate. I was up $7,000 today and I gave a good chunk of it back. Why? Because I'm retarded. No, I'm just kidding. I mean, we talk about what the heck happened, right? How do we fix it and all that fun stuff. Really, really important, right, to have somebody recap the trades. But more important than just recapping the trades, you need to have the confidence to know that this can be done, right? Somebody's got to come in and trade in front of you, the good, the bad, the ugly, and show you that even when you're human and you make some mistakes, you can still be a profitable trader. You know, it's important. From there, you know, you guys will have access to all my scans and stuff on TC2000. So, you know, this is the stuff that we use for. There's a brokerage here too that some people, I personally don't. But you have access to scans and all that stuff. Guys that come in, they'll come in and, you know, they can, they come in and, they, you know, you can message me on TC, and I'll send them my scans, my layout and stuff, so that you can have all the same stuff that I'm looking at, right? Which is really, really important. You know, you need to have the ability. If you can't get somebody's scans, you can't get somebody's layouts, how are you going to, right? And then the best part is, of course, there's lifetime access. So, you know, let me know if you have any questions. KUNAL@bullsonwallstreet.com. You know, if you ever want to just text me or shoot the shit, 517-974-1480. You know, there's so many different instructors and stuff. There's Ross the Boss and Mr. Sykes, and there's those are, you know, and then a million other random ones. The key of really a lot of this stuff is can you get a hold of the guy that's teaching you, right? You know, will he answer your text? Will he FaceTime you while he's dropping a deuce? Whatever, right? You know, a big part of mentorship somebody is, can you get a hold of a guy? Can you give a hold of a guy and nail it down? That's going to be really, really important. We have a deal for you guys. So, you know, if you sign for the next couple days, we'll add in our 6 months of our swing trade service in there. We have payment plans, by the way. I know a lot of you guys, you know, coming up with $2,500. It's expensive, right? It's expensive, and you know, you need to break it up. In our class, we do day trading. My mentor, Paul, he comes in and he teaches swing trading. So he does numerous swing trading classes about his style of trading. And then I also do 2 swing trading classes. And then we have 4 or 5 day trading classes along with the regular market hour stuff. So day trading, swing trading, longer term trading, you know, whatever it is that, you know, you guys want to do, we do it. Because the big part is it's hard to day trader unless you can trade on a longer term basis. If you can't look 6 months out, trade, how are you going to look 6 minutes out? You can't, right? It's just super hard. So we go in and we do both styles, right? Day trading, swing trading. And I've always, frankly, I'm probably a little bit better swing trader than I'm a day trader because you make less mistakes when you swing trade. You know, day trading, you can really get caught up in the moment. Swing trading tends to be more analytical because you buy, set your stop, let it rock. Justin, right, you know, it's a Mike. I mean, when you're day trading, sometimes you could throw all of humanity out the window. Everything you've learned in your life just goes out the window. So let's open this thing up to some questions, and I really appreciate you guys coming in, and we'll get this party going. Joshua, I trade live. I'm not, no paper, none of that bullshit. I put my balls on the kitchen table, and you see me depressed some days, suicidal other days, and celebrating other days. I mean, look, Josh, I have some students of mine. I can name you off 100 students of mine that can smoke me on a trading simulator. They know the strategies in and out so well. But guess what? In the end, can you get your fingers to do it? You know, like I gave back thousands upon thousands of dollars today, right? Why? Well, it was real. When I was up all that money and I started giving it back, I was fucking pissed at myself, and I pushed maybe a little bit too hard, you know, and that becomes really just important, you know. Trading can be a grind like that sometimes, you know. There's just that. You do get 3 months access to the Bulls on Wall Street chat room also. You got to trade live, though, Josh. You know, you just got to do it. Yeah, and so I put a snapshot of my P&L, and I'm in front of these guys all day, but snapshot of my P&L at the end of the day, and, you know, I tell them what I did, and then we have class afterwards, but, you know, like today I told these guys, watch for the V-shaped bounce. They never work. You know, I fucking RNQ anyways, and I just gave up thousands in gains because I'm a greedy bastard sometimes. But, you know, I have good risk management, so I'm still able to keep some decent profits, but just not epic. And Josh, I'm not one of those guys. I very rarely lose more than $1,000. I have a hard stop on my account, you know, to X me out of everything once I get to certain levels. You know, I don't try to make 50,000 in a day or anything like that, man. This is a job. Do you use ERX as a solar ETF? Mr. Brian, how you doing, sir? Good to see you again. So look, this is the deal with solar ETFs. So if you want to go and you want to be trading solar, you can go TAN. So TAN, there's so many windows. TAN is your solar ETF, right? TAN is your solar ETF that you can look to mimic solar stocks, or you can just trade it itself. Facebook. So, okay. Well, Facebook, look, it had this huge pop today. Couple things it needs to do. Either it's got to come back and retest the bottom of this breakout bar, or let it flag out, right? So, like, you know, let it come back for a handful of days or something like that. You know, let it just develop, and then once the pattern sets, you'll be able to get this thing going. Hey, Tabong, what's up, baby? Hey, Scott. For me, determining market direction, I primarily use the QQQs. That's your Nasdaq ETF because that's been the hot thing this year and it's been controlling the market. I primarily do, and then I trade futures on, you know, and I really only trade NQ, which is the Nasdaq futures. It's been pretty cool. Futures is a cool thing if you guys, you know, ever get around to, because you get tons of leverage. So like the Nasdaq, like you get, so like say you get $20 for every 1 point it goes down if you have one share. So if it goes from 5992 to 5840, that's 150 points. You'd make 3 G's off one share. It's pretty cool. Imagine if you had 2 shares or 3 shares, right? You know, and then there's no pattern day trade rule. You know, so you can like kind of rip and ride that stuff pretty easy. So yeah, I use the QQQ, Scott, to answer your question. Handle the hold. Once it's forming, I just go with it. I don't wait till it actually forms because this at that point then you're buying on the second candle to hold, and I'd rather just take the risk that the candle doesn't hold. Oh yeah, Justin, you can definitely. I mean, you can have that as long as you want. I'll just. Will you remind me tonight? It just takes me 1 click to add it to your thing. I have a couple different futures accounts. I have one at Apex Futures, and the other one I use is at Thinkorswim. But both of them, I use Apex more though because their margin requirements are less. It only costs $500 to get one contract of NQ. So you can make some pretty good gains if you nail it. If you don't, then obviously you can lose just as much. So there's that aspect of things. The guy at Apex Futures, his name is Joseph Broad. Tell him you know me. He'll give you a cut on the commissions and stuff, or a better deal. I don't have any relationship with him, but he loves me. So you tell him you know Kanal, he'll cut his commissions a little bit for you. Hey Scott, leveraged ETFs, you can't hold them for life because they do decay, like UVXY or something. Some of them just go to like zero basically, because there are trends, and then you have the leverage. In general, though, if you hold them for 4, 5, 10 days, you know, you're not going to. Not going to hurt you. I mean, if you look at the TQQ, it looks exactly the same as the QQQ. There is some slippage, of course, over time. But when I do swing trades, I'm talking, you know, I'm mostly 2 to 10 days kind of thing. So, you know, at that point, whatever you lose, you'll be okay. But primarily, yeah, you can get some better action day trading. You know, Rick, I don't know what caused that drop in the QQQ. I was hunting around for news, Googling and Twittering, and I didn't even see any. You know, the market's just so overbought and so extended that kind of spook. People are just looking for an excuse to sell, right? That's just, people are looking for any excuse to sell. So I think that's just kind of once the cascading starts, you you could start really cruise down. So just something to, you know, be mindful of. When the market gets extended, people have an itchy trigger finger because everybody knows the market's extended, right? So then once the selling starts, everybody's like, oh, I don't want to be the last man holding this thing. So then everybody just sells. But then, you know, things get, in this market, things get scooped up pretty quick. So a few people have asked about Bitcoins and Ethereum. Yeah, in boot camp, you know, I've been trading the cryptocurrency quite a bit. I just use the exact same patterns I use in stocks, same indicators, everything in the cryptocurrency, and I've been having a lot with it, guys. Cryptocurrency trade, Ethereum, Litecoin, EOS, all that jazz, dude. It's pretty fun. You get really big ranges right now, and they're like just shredding. Coinigy is my charting application for this. I hate this two-factor authentication. Authenticator. I'm always so paranoid. Your phone, then you don't have any authentication. Dun, 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 dun. Well, this thing's taking a second to load. I don't know, I might have just too much stuff going. Dude, oil is awful to trade. I do see what you're trying to do here. I've noticed with oil, these things can go down farther than you think. It's not an easy time. Like if you try to time, if it keeps going down to 25, you could give it a shot. If not, you know, down here. But, you know, they can go a little bit farther than you think sometimes. This type of trade is a little bit tricky for sure. I mean, I see what you're trying to do, though. What the fuck? Dun, 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 dun. Well, you can use TradingView too. Let's see here. So this is the fun part about coins is that, you know, you get really hot runs. It's like in the coins, you know, these things were like $15, then it was $50, then it broke out at $100, and then $200. You got the $400, and then it crashed all the way back down to $100, and now it's kind of farting around in a range for a little bit. But dude, to go from 50 to 400 and crash back, that's a trader's dream right there. I mean, there's just a lot of action in the Bitcoins and stuff. And the Bitcoin is still, I mean, it's holding up. You know, if this thing ever breaks this kind of $3,000 mark, it really could get loose. You know, I understand the setup he's doing on Netflix up to 9 EMA. I typically, when I buy pullbacks, I like to see multiple days of pullback, like 3. That's just personal rule for me. I want to see more reward than a few percent. It's got a lot of momentum, so it may just not give you multiple days. Paul's much better swing trader than I am, but I just, by rule of thumb, like to see multiple days. Hey KP, I always take my entries on a 5-minute. Yeah. Guys, if I missed your question, then just ask it again, because sometimes they just scroll through really fast. This SQ was a really nice move, but I'd let this thing just, it's got to develop a pattern, basically. Without a pattern, so it just sometimes takes some time to set up. Like, this is a powerful stock, but it just needs to set up, right? You've only had 1 day's rest. You got to let it pattern. That's all. There's no EMA that's better. They're all more dependent on the time of day. I like to use the 9 EMA more during like the morning, and then VWAP 20 EMA like towards the later of the day. Anybody else? Guys, and look, this is my number, this is my email. Dude, let me know if you have any questions. I'd love to see you guys in class. My old students, I'm excited to see you guys in class. As you know, we'll shred, and as always, we make some improvements and get things better. And we're going to just use QQQ. There is no symbol for NQ. You got to use the triple Qs, Bruno. Red, email me. I'll try to think of something. I don't have any juicy deals. I mean, I'll try to figure out something, but there are no juice. That is the juicy deal. Guys, it's been real. It's been fun. AJ, when you talk about stops, try to, whatever the average size of a candle is on its 5-minute chart, give it about that, so you have a little bit of room. Then you have the average size like 10 cents on a 5-minute candle, and just eyeball it. Don't try to do any calculations, but just eyeball it. If that's the case, you're good to go. You know what, Bruno? I just like, I don't really know what the heck these Bitcoins are. I just know how to shred them. That's something that you should be Googling. A young man like yourself, you should be up on that Google all day. Guys, it's been real. It's been fun. I hope to see you guys in class. Adios, muchachos. See you around.